Hello friends, welcome back to my channel. Here in front of you is one question from debentures. We will be discussing about the collateral securities and underwriting commission today. The debentures during the year ended 31st March 2024, Antariksh Limited issued 12% debentures of 100 each as the given below. This is given 900 debentures were issued as a collateral security to a bank against a loan of rupees 60,000. And in this question, it is asked from us to pass journal. So to prepare journal for this particular point where the Antariksh Limited have raised a loan of rupees 60,000. So the first journal here it would be bank account debit to bank loan that is of rupees 60,000 in this particular case, right? Now, he says that 900 debentures were issued as a collateral security. First of all, what is a collateral security? The collateral security is a secondary security which is given as along with the primary security for the raising of the loan. Here in this question, when a loan of rupees 60,000 is raised, there might be a primary security of jewelry or some other particular papers given for raising of the loan. Along with that, to give a further security, second security is given as the issue of the 900 debentures which became collateral security. So for issue of the debentures here, as nothing is received except the bank loan, right? When the bank loan is received, we have passed that amount is received in the bank balance, so bank account debit to bank loan. Liability have increased, so we have credited it to the liability account, and the money have been received in the bank, so that have been debited over here because there is increase in the assets. On another side, when we have given debentures as a collateral security, so debentures create a liability for the business, that's why this have been credited, but nothing is received for issue of debentures, right? So that's why here debenture suspense account is debited, because debentures are given as a collateral and nothing is received against these 12% debentures. So which account is debited here? To pass the journal, debenture suspense account with rupees 90,000 here in this particular case. Okay, if I have to represent this particular point in the balance sheet, how we will represent? Now firstly we will discuss that, then we will go to the second point. To prepare the balance sheet, we need to prepare notes to accounts. In the notes to accounts, we will write long term borrowings. You know very well that bank loan debentures, the both are borrowings for the business, and they are long term because they are not payable within a year. So bank loan was raised by Antariksh Limited for rupees 60,000. We have shown it here in the details column, right? And after that we have 12% debentures. We pass the journal for 12% debentures, which also become our liability. But in respect to the debentures, we have written the word debenture suspense, which was with the debit balance. So debenture suspense does not show a required amount received by the firm. That's why it is deducted from 12% debentures here. So 90,000 was the debentures value, and debenture suspense also represented 90,000. Both give a deducted value of 0 here, and the total of the long term borrowing is 60,000. This total amount of rupees 60,000 is carried to the balance sheet for the notes to account 1. Let's see how it is to be. In the balance sheet here, we have shown equities and liabilities. For the liability side, non-current liability from notes to account number 1, long-term borrowings were of rupees 60,000. Now mind you, here for showing the long-term borrowings, we have showed only the value of rupees 60,000 as a bank loan, because actually we raised a bank loan of rupees 60,000 and debentures were given as a collateral security. So the point we have discussed here is that if the debentures are issued as a collateral security, and if we are supposed to pass a journal, so for passing a journal, the debenture suspense account is debited and debentures accounts is credited. This full amount is cancelled each against and that's why we are left with the bank loan value here, right? So there is the one case for the collateral security which we have discussed here, that for passing the journal how debentures are shown in the balance sheet. Now, if in this, for this particular case of 900 debentures, if we were not supposed to pass the journal, and suppose that we were asked to go along, show the debentures issued as collateral security for a bank loan of rupees 60,000 without passing a journal, if we are not supposed to pass the journal, how this particular amount of rupees 90,000 would be shown in your notes to accounts. In that very case, first of all, you have to keep in mind, for not passing a journal, single journal is passed for bank account debit to bank loan, and for debentures issued as a collateral security, no journal is passed in that very case. In that very case, in the notes to accounts, how we show over here is long term borrowings, bank loan was of rupees 60,000 in amount column, and we will write over here in the narration that 912% debentures of rupees 100 each were issued as a collateral security. So in the case of the collateral security, you are given two cases. First, with journal. In case of journal, we deduct from debenture suspense account in your notes to account. And when we do it for the without journal, we only write bank loan over here, and these particular 900 debentures are just shown as a narration to the given long term borrowings here, and in the balance sheet a total sum of rupees 60,000 is shown for the case of your without journal. For how it is to be shown for equities and liabilities, non-current liability, long-term borrowing, point number 1, there was a bank loan of 60,000 which is shown in the amount column. Now the next point over here was underwriters were to be paid a commission of 48,000. Now 48,000 underwriting commission is due. So for making a due of underwriting commission, we will write underwriting commission account debit to underwriters account being the commission due. Here the commission is just due, and for making it due, the expense have been debited, and to whom it is payable is credited with the rupees of 48,000 here. Now, in the question it says 25% of this amount is paid to them in cash and balances by issue of debentures at a discount of 10%, which were redeemable at par. When debentures are redeemable at par, we need not to consider this point. Now, for 25%, we have to make them a payment through bank. So 48,000's 25% means 12,000 rupees. This 12,000 is paid in cash, so 12,000 is deducted from a sum of rupees 48,000. How this 12,000 came? That was 25% of 48,000 is 12,000, which is paid to them in cash. How much balance is left? 36,000. Now in the question it's given to us that rupees 100 debenture is issued to them at a discount of 10%. When the discount is debentures are issued at a discount, so at what value these were issued? These were issued for rupees 90,000. So the balance amount left over is divided by the issue value. Here issue value was at a discount, so that's why 36,000 is divided by 90. How many number of debentures we got over here? That is 400 debentures. So how many debentures were issued to them? For 40,000 rupees. And how much value is of discount? That is of rupees 40 in 400 into 10, that is of 4,000. And how much is the value which actually they receive out of the total debentures of 40,000? 4,000 was the value of discount, so underwriters were given a total sum of rupees 36,000 here. So underwriters total amount was 48,000, out of which 12,000 was paid in cash because money is going out, so it has been credited here. Then the debentures issued were of original value 40,000. You have to write over here the face value, and the discount, because it is a loss on issue of debenture, that was with 10 has been debited over here with rupees 4000. If you want to split entry, so you can see over here, actually underwriters were given a cash of rupees underwriters were given a cash of rupees 12000, right? And for the rest value we have issued them a debentures. So underwriters which were left with 36000 were issued debentures of value 40,000, and on issue of debenture there was a discount of rupees 4000. So that's how this is clubbed entry which we made over here. Underwriters were debited with rupees 48,000 total here. The discount is debited with rupees 4000. You can write discount here also, you can write loss also on issue of debentures. And there was a payment of rupees 12000 which we have shown with the bank, and the debentures were issued for rupees 40,000. So this is how this part is done for the debentures, underwriting commission point we did, and collateral security. Thank you. Accountitude, keep scoring, like, share and subscribe to my channel.